Okay, so just like the name implies, ascending and descending triangles are one of those patterns you come across in the forex market. You cannot escape. But you know one thing I've always said when it comes to pattern is not the first place you want to start. Pattern is just to further confirm what you think you know, right? So, but the major thing still remains the market structure. But seeing those patterns would just help you to be sure you are still on the right track. Are we together, Ma? So let's write and start with ascending triangles. Ascending triangle is a continuation pattern. Ascending triangle is a continuation pattern that lets us know that the market might likely to push up and buyers will take over or continue the initial trend. Continue the initial trend. First up. Have you written it?
Yes, ma'am.
An ascending triangle consists of the market making higher highs. So I said higher highs. So the market making higher lows, not higher highs, right? Higher lows. Higher lows into a resistance zone.
Ascending triangle, ma'am.
Consists of the market making, yes, I'm trying to tell you how the shape looks. Comprises of the market making higher lows into a resistance zone. Into a resistance zone. First off. Okay. Now, have you ever noticed that sometimes you're trying to draw a trend line, but it's not really looking straight? One part of it at the top might be bent. Have you ever noticed that? And it's not your fault. You are thinking, why is this trend line not straight? But if you start paying attention, you notice that some of those trend in such a way they actually look like a triangle. More to say, that's why we call it ascending. You know, when something is ascending, what are we trying to say? Is gradually climbing up. Now naturally, right, the rule is we sell our resistance, is it not?
Yes, ma'am.
Okay, I want to give us the what's it called, the reason why this pattern works well. Number one, let's remember that it's a continuation pattern. Now, continuation means if we say this is a buy, meaning we must have been in an uptrend, true or false, for us to continue ascending up or buying. It must have been an uptrend. Now, remember in an uptrend, most often, one of the reversal signs, please pay attention. One of the reversal signs you note is that the market stops making higher highs. Remember that. So this market has bought, it got to this high, it could not go higher. Again, it came to that same resistance, it still could not go higher. In fact, if you look very well, this is now a pattern here that looks like a letter M. Are you seeing that?
Yes.
Now, when you see a letter M, what comes to your mind? What pattern is that? A reversal pattern, is it not?
Yes, ma'am.
And a likely sell pattern. That's another thing I want you to hold. So most people looking at this market will be looking to sell the market. That's the idea. Everybody wants to sell because, oh, I've seen that this market has been moving up. It could not create higher highs any longer. It could no longer create another high after the last high. So gradually, they think the market is going to sell. And now, to further confirm that, you now even see something that looks like a double top, triple top, because I can say this is a triple top, 1, 2, 3 now. Another confirmation that, oh, this market has not been able to break this resistance. Excuse me. So everybody's selling will most likely do what? Have their stop loss just above this resistance zone. True or false?
True, ma'am.
Now, what market makers are looking for, the people who play big in this market, is what we call liquidity. Liquidity means they want to grab a lot of people's money. So they're always looking at, okay, where do people have more liquidity in this market? Where is much cash flow? It's simple. If everybody is selling around this resistance, what it means is everybody's going to be putting their stop loss above the resistance. There's a lot of money around that resistance. So even if you miss the first sell, you that came in and you saw the second one, you want to join the sell. They know that everybody is selling. You know the rule, sell at resistance. So what they gradually do is to break above that resistance and pack everybody's stop loss order. Now, when you have a stop loss for yourself, it's like you creating a buy order that if this thing goes wrong, you want to close that trade. But you know, it's your money that is involved. I don't want to confuse you with that. But you know that when you put stop loss, that stop loss is like your money you're willing to risk, is it not? So, one of the ways you know that this is an ascending triangle and this market is going to buy is you now paying attention to the trend line below where this buy momentum keeps going higher. You can see this buy move. The next one was higher than this. The next one also went a little bit higher. So this was gradually telling you exactly, because the market does not do anything without giving you the signs if you pay attention. So even if you were looking at this before, you are also looking at this, you now begin to say that, okay, we are gathering momentum and moving into this resistance zone. The more we keep firing that momentum, what happens at some point, this resistance must give way, it must break. So the moment I see these higher lows being created, I would vanish any sell idea that is in my brain. I'll forget all those, oh, it's no longer creating higher highs. I'm saying that it's now creating higher lows. I would be waiting to also buy like the market makers. Do you understand, man? Now, another reason why this pattern would work very well is simple. The moment the buy is triggered, the moment it breaks, all those stop loss orders become buy orders that get triggered, adding more momentum for the buy to keep moving. So that's why we said an ascending triangle is actually like a buy signal, right? In an uptrend. Is understandable, right? What I just explained. So two things to just watch out for. Watch out for the market making a series of higher moves into a resistance zone that has not been broken before, or as a recent is a strong resistance. That's how you know that that market might likely push up and continue to buy. So write this, man, notes. Write this in your notes. The longer the pattern takes to form, the more significant it is. The longer the pattern takes to form, the more significant the pattern is. Are we together?
Yes, ma'am.
Okay, another thing. Right. Why the pattern works. That's like a subheading. Why the pattern works. One, there is much liquidity. There is much liquidity created by the stop loss the stop loss that are triggered above the resistance level. There is much liquidity created by the stop loss that are triggered above the resistance level, and this further pushes the market up. And this further pushes the market up. I think that was what I just explained now, so you most likely understand that. Am I correct, ma'am?
Yes, ma'am. Yes, ma'am.
Number two, the higher lows into the resistance shows the strength of buyers taking over the market. The higher lows into the resistance shows the strength of buyers likely to take over the market. Full stop. Are we there?
Yes.
So the next subtopic now will be, how do we now trade it? How do we trade the pattern? So right, that how to trade the pattern.
Done.
Number one, look for an ascending triangle in an uptrend. Look for an ascending triangle in an uptrend.
Yes.
Two, buy when the market breaks above the resistance. Buy when the market breaks above the resistance. Now put in brackets. If it gives you an opportunity for a retest, you can pick a lower entry.
Done, ma'am.
Okay. And now, right, your stop loss will be the lows below the lows of the buy move into the resistance, or below the trend line that moved into the resistance. Any of the two, still the same thing.
All right.
Okay, so what did I mean by that? Looking at this chart, you can see this was a low created here on this trend line that moved into the resistance. So I could have my stop loss here, or I could target the second one, right? And have it here. I always like good risk to reward ratio, right? Some of the textbook will tell you, oh, until it breaks, this is the lowest point of this pattern. But to me, if I'm entering here and my stop loss is way here, I'm risking very much, is it not? So I'd rather not have my stop loss here. I would rather have my stop loss below this low, or at least to be on the safer side, the next zone. Yeah. So whatever, to me, whatever makes the market come back all the way down here, then we might most likely not going up any longer. Probably by then we're having another pattern, triple top. This is now breaking the neckline. Remember that our reversal pattern, either double top, is breaking the neckline, is going down. So that's how I have my stop loss most likely around here. Do we understand?
Yes, ma'am.
So, and of course, your TP, you can always use market structure for your TP. Probably you want to take two trades, TP1, twin trading, TP1, TP2. You could now use the next zone, TP1, then the zone after that, all you have to do is just look left in the market before. You see the zones for you to have your take profit level. So that's
All
about
right.
ascending triangles. Now, descending triangles are just the opposites of ascending triangles. So let's write that descending triangles. A descending triangle is a cell continuation pattern. Is a cell continuation pattern that lets us know the intention of sellers to continue pushing the prices lower. That lets us know the intention of sellers to continue to push the prices lower. Full stop. Can I proceed?
Yes, ma'am.
In this case, market continues to make lower highs. Market continues to make lower highs into a support area. Market continues to make lower highs into a support area. Into a support area. So what we are trying to say is just like the other one was going on. When we say something is descending, it keeps going down. And in this scenario, we're going to have a support zone where everybody is also looking to buy because they've noticed that the market is no longer creating lower lows. Remember, one of the symbol of an ending downtrend is that instead of going lower, everything starts to move up, so in this case, probably this market has been going down, but you now notice that it's not going lower than this, right? Each time it came down, he respected this support and was still bouncing up. So most people would have been getting ready to start buying. They want to start exiting their sell position. That's what it means, because they noticed that, market was not going lower than this support. Meanwhile, at the upper end, if you pay attention, you see that, okay, the next low created was lower than the previous one. So that would have been an indication of the strength of the sellers gradually increasing. So that's why when you look at the market, you can't just look at a glance. No, you have to look at the whole market structure. Because anybody just say, no, they say we should buy at support and it jumps in the buy, especially in a downtrend. Of course, that kind of person can gets caught up in what is actually happening. So the most important thing to note is that the market must be creating a series of lower moves down into that support area until eventually it breaks below that support, right? The moment it breaks the support, you can now enter for a sell, right? Either on a retest or the moment it closes. Do you understand? So it's still the same. So also write this down. It's very important. Remember I said that the longer the pattern takes to form, the better. You don't want to see a pattern like this in 2 weeks, and probably the trend has been around for probably a year, and this pattern takes 2 weeks to form. You might fail. Do you understand, man? So the longer it takes the pattern to form in relation to your trend, the better it is. So in this scenario also, why does it work? It's simple. It works because the stop losses around this support area are also going to get triggered. People are putting their stop loss here. They are buying. Meaning they have sell orders. That stop loss is like a sell order to close what the bought when the market is no longer favorable. It's like you bought the land for 500. If somebody start pricing 400 and you need cash, what's going to happen? So that your buy order, you have to sell it to be able to get out. Exactly. So your stop loss in this case too will now be like a sell order So the moment this triggers, it's like now saying we now have multiple cells where your stop loss is. Now the more the multiple cells, because these were already selling, it's gonna keep pushing down. It's like saying probably we had like 5 sellers before. Now more than 50 stop loss orders, meaning more than 50 sell orders were triggered. What will happen to that cell? The market will keep going down. Do you understand, ma? So that would further increase the selling pressure. That's one of the reasons why the pattern does not fail most often, because of the liquidity that gets triggered when the stop loss are hit. So how do you also trade this? It's also the same way. Wait for the break. If you have a retest, fine. But the moment it closes, you can enter if it's not far away from your support. If not, if you have a retest, you can enter on the retest. Remember, this is also a zone that gets broken. So you can now enter on the retest and join the sell. And if the selling pressure was much, you might not have a proper retest. So if you see anything like a flag, you also know how to trade that now, right? You enter and follow that move all the way down. And in this scenario, our stop loss could be above this eye, this trend line area here, or you want to be on the safer side, you could go in here. But I would not risk this. For me, this is much. Naturally, we expect that this down move that's going to go should be the equal to the size of this eye behind this eye point. So let's say this is like 300 pips from here to here, this wideness. We expect that the move that is also going to happen should be like 300 pips. Do you understand? So, but you can now decide to write the TP based on the market structure. That's one way to trade it. So, any question on this ascending and descending triangle?
No.
Okay, it's very clear. So what you're going to do as an assignment, because I told you it's a continuation pattern, so you're going to look for samples of this ascending and descending triangle and send to me. So what I expect is if you're looking for a descending triangle, you should go and try a downtrend. And if you're also looking for an ascending triangle, look for it in an uptrend. Are we
All
good,
right.
ma'am? Okay, ma'am. So thank you. I think we've come to the end of today's class. Our next class, we can now undo fake out. All right, ma'am. So have an amazing evening. Bye, ma'am. One more minute. Are you still there, ma'am?
Yes, ma'am.
Now you're sending me